Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Young, thank you for making time today.
Happy to be here.
Well, markets got a boost from Trump administration officials saying that the U.S. China trade deal is still intact. The U.S. economy also showing some improvement, which sent all three main indexes on Wall Street higher. What's the story in the global markets and here in Korea?
Okay, well, as you mentioned, the U.S. market has been rising this week, and much of that is, as you mentioned, due to Peter Navarro, who had commented that the U.S. China trade deal was over, but he had to take back the comment. So that added significant push to the market, but also there has been a couple of good news in the U.S. economy. The housing sales in May had been better than expected, so a lot of people figure that U.S. is making a comeback. And then the Purchasing Managers Index, which is sort of a forward indicator of how businesses will do in the next month or so. In June, the Purchasing Managers Index went up, which means that the companies are probably going to buy much more than they did in May. That means, at least from the company's point of view, things seem to be optimistic. Now, from the stock market's point of view, there's a lot of question on whether this increase is a long-term trend or it's just a short-term burst due to the end of the shutdown. There's mounting evidence that reopening in the U.S. may have been done too early. Coronavirus is rising in 20 states, and there is also continuing concerns on whether this rise in stock market is a bubble or is it real. And a lot of people are starting to short sell the market. Some analysts believe that this is a indication that a lot of people are starting to believe that the market is in bubble. So there is significant number of other analysts who believe that this is just a normal hedging process. But still, the market, even though it is rising, does seem to be somewhat nervous. So U.S. markets are doing well. European market, last week, like the U.S., it was in sort of a wait-and-see pattern, but it also picked up with the same trend with the U.S. It's rising this week. Hong Kong stock indices has been rising as well, but so strangely enough, Shanghai and Nikkei indices seem to be now in a sort of a holding pattern. They're not rising or falling by very much. Kospi and Kosdaq, they're taking the U.S. trend. They've risen quite significantly this week.
Well, talking about oil prices for a minute, they of course had gone negative during the pandemic, but they continue to recover. West Texas crude up to $40 a barrel now, but some saying the sector itself might not be improving so much. Professor, what do you see happening in the third quarter with oil?
Okay, well, you have to remember that oil prices are still significantly down compared to the situation before the coronavirus. There has been an increase in prices lately, and that may be because U.S. is getting out of the lockdown. Though, as I mentioned earlier, there's more and more concern that perhaps U.S. opened up too early. European Union, China, Japan, they're moving out of the worst of the coronavirus slowdown. They seem to be heading out of the coronavirus in a rather regular fashion, not like the United States. So the global demand for oil seems to be inching back, but it's too early, I think, to be completely optimistic about oil because there's still a large amount of stored oil, unusually large amount that has to be spent first before the prices really starts to rise significantly. There has been an agreement, I think, between the OPEC and other major oil producers, so they're probably going to start making the headway on reducing the stored oil, but still I think it'll take more than third quarter, maybe fourth quarter or early next year for oil prices to really recover to the pre-coronavirus levels.
Now, the pandemic, of course, has caused revenues to plummet in many kinds of small businesses, especially. In fact, a statistic from the Bank of Korea, if this continues, then even if you sold all the financial assets of more than 300,000 households, they wouldn't be able to hold out longer than a year. So for the self-employed in particular, what needs to be done?
Okay, well, that by the self-employed in Korea has always been a problem. If you look at the household debt problem in Korea, the largest component was housing and real estate related loans. But the second largest component, even though it is very much smaller than the real estate component, the second largest component was lending to self-employed. And unlike the housing and real estate loans, the borrowers who are self-employed, they do not necessarily have good credit rating. They do not necessarily have stable income. So even though the proportion is a lot less than real estate related lending, it was more of a risky lending. Now, what can we do right now? I think right now the situation is much too unstable to have the company deal with the problem directly, which is letting some of these companies, smaller companies, perhaps go out of business. But the economy is much too unstable right now. We're going to have to give some aid to these companies, but as soon as the recovery takes place, we may have to see which companies no longer deserve any additional loans.
It's a big conundrum to be sure, Professor. Thanks so much for sharing your insights today. We appreciate it.
Thank you.